Hello and welcome to the Scientific Investor series of OmniScience Capital. Today we will talk about stock picking versus portfolio building. Okay, and most people get this wrong. So we want to safeguard that, and today we'll talk how to do better than the just stock picking and how to pick up the mindset of portfolio building. Okay, and we will also talk a little bit about the process. Most people, basically, when you come to the stock market, you think you are been told that just pick good stocks, buy and hold, and so on. And then you don't know what happens is you just get some money and you are saying, okay, this 10 lakhs, 5 lakhs I'm going to invest, or 2 lakh rupees, and I'll just buy this stock. This is a great stock. Then again you get a chunk of 3 lakh rupees, and that time again you're looking for some stocks and some news article or some analysis, some analyst report, some fund manager, and you do your own little bit due diligence or whatever. Maybe you're expert, maybe you're beginner, and to whatever you do the best to that extent, and you buy that stock. Now this is what is called stock picking. After 3 years you realize that you just have like 60-70 stocks sometimes, or you have those 5 stocks but they're not working, and so on and so forth. So this is where you need to start. Now you are mature enough, now your corpus is probably about 20 lakhs or 1 crore or whatever, and now you're saying I am ready for learning portfolio management rather than just stock picking. Okay, and that's where the real outcomes. Now you can have a professionally or a disciplined approach to markets, not an amateur approach like earlier. And that, what is a portfolio? So portfolio is not just randomly put stocks. First of all, you need to know how many stocks. I'll just give you a clue for how many stocks, although we have a more detailed video about all these things. But let me give you very quickly that suppose you are okay despite all kinds of risk management and analysis and due diligence. What will happen is sometimes something has gone bad, even the promoter doesn't know, right? That's why they call it risk, because business always has risks, and if that risk materializes, then that company goes to has a significant loss. So when the company has losses or reduced earnings power and all that, then that is going to have an impact on the portfolio. So how much are you willing to lose in a stock? So let's say you're willing to lose 10%, then 10 stock portfolio, 10% each, or at least the largest allocation is 10%. If you're willing to leave 4 or 5, which is what we believe in, right? So 4% or 5% means 20 to 25 stocks, sometimes 3, which is 30 stocks. Okay, so this is how you first start understanding that portfolio is a very professional thing. And in one of our videos, which probably you'll see here, is the scientific investing framework, which goes into all this in great detail. It is a system where you just don't have 25 stocks put together. I'll give you an example. When you go to the doctor and you have some fever and all that, and you tell them that I have sneezing, I have cough, I have cold, I have this, I have that, the doctor knows whether it's viral or bacterial. And let's say it's bacterial, so he gives you a antibiotic, but the antibiotics have side effects, so he gives you some multivitamins or and so on and so forth. So you have to take all the tablets, and the tablet is like a portfolio. Okay, all of them. You can't just decide that, okay, I'll just take the vitamins or I'll just take the antibiotic, and why should I have 5 pills? No. Same way, portfolio has number of components. Okay, it has number of sectors, it has number of industries, it has number of stocks, it has a number of growth vectors. And then we try to have so that these are diversified, they are less correlated. Now there is a way of doing correlation by doing mathematical, that which are the stocks correlated. There is a way which is intellectual or conceptual, that that electric vehicle, if there is a portfolio of electric vehicles, it will be correlated with power a little bit. Okay, but if you have a portfolio of electric vehicles with IT or pharma, it will have no very low correlation, logically speaking, right? So this is how you create a portfolio. And it's not just about allocation. Now each part of the thing, you have to have selections. It is not that just buy anything and whatever capital is available. You target, even if you don't have the capital today. Let's say you're creating a 20 lakh portfolio and you just have 5 lakhs today, and you think every quarter I will add 5 lakhs so that by end of year I'll have a 20 lakh portfolio. Then you, in 5 lakhs, you can only buy 4 or 5 stocks or 6 stocks. Okay, next 5 lakh chunk, again buy 6-7 stocks, and so on, so that eventually you have a 20, 30, 25 stock portfolio by end of the year. And then every time you select, you have to decide when is the timing right, when is the when you're getting good deals, and you're trying to already create diversification. So if you have already got 5 stocks from FMCG, you can't keep adding 5 FMCG stocks. In the next chunk, you have to have some other sector which is completely or slightly less correlated. So most investors do not know rebalancing, they don't know timing, they don't know asset allocation, I mean the stock allocation within the portfolio, industry allocation within the portfolio, and so on. And then the portfolio is all over the place. It's a semi-professional, amateurish portfolio versus what we are explaining, that becomes a professionalish portfolio, right? So this is how you have to understand, and to fit into it, you are searching, and also you are searching the market, what are the best deals, and then you say, how will this best deal fit in with my portfolio? And you have to be flexible, because market keeps changing regularly. So even though you started with some idea at the beginning of the year, as things go, they have to change. So you have to be able to adapt your portfolio to this. Okay, but now you are moving from random ideas, ad hoc or haphazard ideas, you are moving to systems. Okay, and just intuitively doing something, something, you are creating a framework and structure and a system. And now you're becoming more professional. Now you're becoming a scientific investor. So from amateur investor to scientific investor, this is what separates them. Hopefully you understood this. Follow us, like, subscribe, and follow on the channel. We have number of videos under the Scientific Investor series which you will love, and try to help you become a serious scientific investor. Thank you.